Listen to me. If you are retired or you are staring down the barrel of retirement, you are vulnerable. You are vulnerable because you are living on a fixed income and you are terrified of running out of money before you run out of time. So when an app pops up on your smartphone promising you an easy line of credit, a way to boost your score, or a way to get cash fast, your eyes light up. You think, finally, a lifeline. Finally, something to help me bridge the gap. The app is called Kickoff. And the question I am getting flooded with right now from people exactly like you is this: can you borrow money with the Kickoff app? I want you to look at me. I want you to hear me clearly. No, you cannot. You cannot use Kickoff to borrow cash to pay your electric bill. You cannot use it to buy groceries, and you cannot use it to put gas in your car. If you go into this app thinking it is a traditional loan or a standard credit card that is going to hand you cash to get through the month, you are making a devastating financial mistake. Let's break down exactly what this is, because what you don't know will hurt you. Kickoff is what the financial technology world calls a credit builder. It is designed for people who have zero credit or people whose credit scores have been absolutely decimated by life events, divorce, bankruptcy, medical debt. It works by opening up a fake-looking line of credit, usually starting at $750 up to $3,500, depending on the plan you buy. They report this big line of credit to the major credit bureaus, Equifax, Experian, and TransUnion. But here is the catch, and this is where people get tripped up. That $750 credit line? You cannot spend it anywhere in the real world. You can only use it inside the Kickoff digital store to buy Kickoff's own services or ebooks. Essentially, they give you a credit line so you can use that credit line to pay for the very app you just downloaded. Then you use your real, hard-earned money from your checking account to pay off that small balance every month. Why do they do this? They do it to create a paper trail. They are manufacturing a history of on-time payments to show the credit bureaus that you are responsible. And yes, for a young kid fresh out of college with a thin credit file, or someone rebuilding after a catastrophic financial event, it can bump up a credit score by 50 or 80 points over a year. But I want you to ask yourself a very serious, very honest question. Why do you, a retiree, care so much about your credit score right now? Let's talk about the fear driving this. Many of you are terrified because your income dropped when you stopped working. You see your credit score dipping because maybe you paid off your mortgage. Yes, ironic as it is, losing that active loan can drop your score, or maybe you had to carry a balance on a card for a few months. You feel like you are losing control. You think a high credit score is your only safety net. But a credit score is not wealth. A credit score is merely a reflection of your relationship with debt. It tells a bank how good you are at borrowing money and paying interest. If you are in retirement or on the doorstep of it, your goal should not be accumulating more debt. Your goal must be protecting your cash flow. What happens if you sign up for an app like Kickoff when you are already tight on cash? They charge you a subscription fee. As of right now, it costs anywhere from $5 a month for the basic plan, all the way up to $20 or $35 a month for their premium and ultimate tiers. Now, $5 or $20 might not sound like a lot to a high earner, but on a fixed Social Security income, every single dollar is a soldier fighting for your survival. If you are paying $20 a month just to see a number on a screen go up, but you aren't planning on buying a house or financing a brand new car next week, you are literally throwing your grocery money into the wind. You are spending money to build credit you do not even need to use. And let's look at the absolute worst-case scenario. Say you sign up for one of these credit builder apps. You put it on autopilot with autopay. But then, a medical bill hits. Or your property taxes go up. Your checking account drops to zero, the automatic payment bounces, and now you have a missed payment on a credit builder account. The irony is tragic. The very tool you bought to fix your credit ends up slamming your score down even lower because you couldn't keep up with the artificial payments. You must stop looking for high-tech, algorithmic band-aids to solve structural financial problems. If you need immediate cash to live on, Kickoff is not the answer. Borrowing money to pay for daily life in retirement is a dangerous, slippery slope that leads to financial ruin. So, what is your actionable takeaway today? What do you need to do right now? First, if you are currently using or thinking about using Kickoff just to chase a higher credit score, and you have no intention of taking out a major loan in the next 12 to 24 months, I want you to pause. If you are already in the app, look at what it is costing you. If you are paying for the premium tiers just for features like rent reporting or identity theft insurance, check if you can get those elsewhere for cheaper or if your existing bank already offers them for free. Do not pay a premium to a fintech app just for the sake of checking a box. Second, if you genuinely need to borrow money because of an emergency, look away from apps and look toward your actual assets. Do you have equity in your home that could be accessed safely through a traditional, highly regulated financial institution? Do you have a permanent life insurance policy with cash value you can draw from? Do you have family members you can have an open, honest conversation with before you turn to predatory or confusing digital marketplace loans? Third, protect your cash flow at all costs. Sit down today with a piece of paper and a pen. Write down every single automated subscription hitting your credit card or bank account. If you see fintech apps, credit monitoring services, or gimmicky financial tools taking $5 here, $10 there, or $20 there, cancel them. Bring that money back into your physical control. Your security in retirement does not come from a 3-digit score controlled by Equifax. Your security comes from your clarity, your resolve, and your absolute refusal to let a single dollar slip through your fingers into the pockets of companies promising quick fixes. Be safe, be smart, and protect your hard-earned money. No one else is going to do it for you.